Hello and welcome to VCC TV. This is Joseph Rai. The Indian economy grew at its slowest pace in more than 2 years in the January-March quarter at just 6.1%. For the full fiscal, economic growth slowed down to 7.1% from a high of 8% in the previous fiscal. Now, the slowdown in economic growth was expected because of the government's decision to withdraw high-value currency notes in November last year. But economic growth at just 6.1% in the March quarter was below market expectations. This, in effect, has stripped India of its status as the world's fastest growing economy after China clocked a GDP growth of 6.9% in the March quarter. Let's have a look at the key figures in the GDP data. Gross value added, which is the difference between GDP and net indirect taxes, grew by just 5.6% in the March quarter against 6.7% in the previous quarter. Among the sectors that did well was agriculture, thanks to the good monsoons. So while agricultural growth slowed to 5.2% in the last quarter, the sector remained robust. Mining sector also gave a boost to the sector as it grew 6.4% in the March quarter. The sectors that were worst affected were financial services and construction. Financial services grew by just 2.2%, while construction continued to contract. It contracted by 3.7% in the last quarter. Now, it'll be interesting to watch the Reserve Bank of India's readings of the GDP numbers, as the central bank has remained pretty hawkish. The smooth rollout of the goods and services tax will also be closely watched, as the GST is expected to prop up the economy. That's all we have in this edition of VCC TV. Do keep watching us for more updates.